Good morning, everyone. We are in the daily market outlook for Wednesday, 15th of August 2012, as most of Europe is closed due to the holiday. A rather quiet market seen during the overnight session and the early European hours, with the single currency still holding the lower levels following yesterday's series of expected but disappointing data from a number of Eurozone countries where the GDPs of Eurozone and the zoo economic sentiments show significant degrees, while Spain, France only managed to stay at previous levels, not showing any drop in the GDP, but as said, quite disappointing data that were expected based on the current situation in the Eurozone countries and current crisis, with also upbeat US retail sales coming later on, giving a significant boost to the US dollar and pushing the single currency and sterling to the lower levels. Absence of any data, any news releases from Europe today sees a rather quiet European session, except the UK that there is actually there are a series of indicators from UK starting at 8:30 GMT average earning index and unemployment rate that is expected to stay unchanged at 8.1%, with the average earning index expected to go to 1.8% compared to 1.5% of July's release. Also important MPC's meeting minutes are due to be released, and the climate count changed for July 6.3 thousand compared to 6.1 thousand. Two quite significant releases up ahead of Bank of England's Governor Mervyn King having speech at 9:30. So this might give us some more action during the European hours. America starts with a series of releases at 12:30 GMT, with the CPI expected to go up but by 0.2%, while core CPI is going forecasted at 0.3% compared to 0.3%, 2% in the June. And the Empire State Manufacturing Index for August is seen at 7.3, slightly below the July's release at 7.4. At 13:15 industrial production for July, forecast shows quite optimistic 0.6% compared to 0.4% of June's release. Also, the capacity utilization rate for July is expected to go up to 79.3% compared to 78.9% in June, and the housing market index for August, due at 1400 GMT, is forecasted at 34 compared to 35 of previous release. Also important are crude oil inventories. We do not have in our calendar forecast for some reason. We're going to take a look. The forecast for today is draw of 2 million barrels for the previous week, compared to draw of 3.7 million barrels of crude oil released in the previous week. And that was all from today's calendar. We're going to move now to our instruments, currencies and commodities, and see the latest movements in past 24 hours since we had the last session. As shown on the hourly chart of euro dollar, the single currency pulled back after a failure to regain 12400. 123.84 was seen, testing basically the previous high at 123.86 of 9th of August. As mentioned at the beginning, negative releases from Eurozone, and later on positive US data accelerated losses, losing initial support at 123.24, but just a brief drop was seen down to 123.15, still holding above important 123 level, with the 123.15 also previous high of last Friday, so far containing the downside. Hourly chart still shows a rather negative tone, despite the pair holding base, holding above 123 base, with the current action in the early hours of Europe breaking above the moving averages, seeing basically potential for a fresh attempt higher. On the 4-hour chart, still I would say rather negative, neutral tone seen, but a current bounce higher sees potential for possible further extension higher, as 55 days exponential moving average so far holds the downside, but both moving averages are still pointing sideways, so we need to see some more movements higher, and basically clearance of regain of 124 is required to improve the current situation and possibly open way for test of key short-term barrier at 124.40. Otherwise, further consolidation would be the likely scenario. Risk on the short term is seen on loss of 123.15, 123. That might open downside levels at 120. Pardon, we are in the hour. Loss of 123.15, 123.00 to open downside levels at 122.40, low of last Friday, and allow for deep reversal. The deep reversal loss of 122.40, it also marks 50% retracement of the corrective action from 120.42 to 124.41. Would be bearish at this point, and would allow for further weakness. Otherwise, most likely scenario would be further consolidation and I would say rather sideways movements within 123 and 124 levels in the near term. The cable is slightly at the back foot following yesterday's rejection at 157.27 after 200 days moving average has been briefly dented, currently standing at 157.19, but failure to sustain gains at these levels, and the loss of 157 handle sees the near-term structure a bit weaker in the early hours of European session, with the 156.50 initial support zone still staying intact, but rather negative tone seen on the hourly chart. Sees more potential and sees more downside, more vulnerable at this point. Basically, loss of 156.50 seen as a trigger to this also marks 50% retracement of the upleg, latest upleg from 155.76 to 157.27, and the loss of this support zone would be seen as a trigger for further weakness. Larger picture is still in a rather neutral mode, with the price action being entrenched between 155 and 157.70 range, with series of very strong barriers on the upside, starting with 157.19, the 200 days moving average, 90 days moving average at 157.38, and the range tops at 157.60, 70, seen as quite a strong barrier at this point, and basically break above the range ceiling would be a signal of establishing a fresh direction. Otherwise, we might see further range with 155 seen so far as a good support. This is also the bull trend line drawn of 152.67, low of 1st of June, and the only loss of 155 would on the downside would weaken the short-term structure of the cable. Just to remind you that a series of data due to be released from UK might have a stronger impact on the the pair, again according to the releases and the releases compared to expectations. This varies in case of more or less expected levels, not much to be seen. Otherwise, we might see some stronger action. Point the focus remains on the Bank of England MPC's meeting minutes and unemployment rate, as well as Governor King's speech that will give some more light and most likely give more direction to the pair. The dollar yen remains positive of recent 78 basis past 2 days. Strong rally breached the short-term range top at 78.80, extending so far to 78.94, just ahead of 79.00. That marks 50% retracement of 80.09 to 77.90 descend. Round figure resistance also, above which we also have 200 days moving average currently at 79.17. Strong resistances at this point, break of which is required to trigger some more action towards the upside. However, the larger picture still shows the pair within in the sideways, rather sideways mode, and entrenched within, I would say, 78 and 80.00 range, with the break above 79.16 needed to give some more boost and prevent the pair from testing important and key short-term supports at 78.00 and 77.65. Daily studies are gaining momentum and pointing higher, that see good potential for a further extension higher. However, hourly structure now shows overextended conditions, yet no clear signal of any reversal, but it suggests that possibly the corrective action might precede a fresh rally. The pair is currently at testing important barrier 78.94, yesterday's low, and just ahead of 79.00, and we need to see the break here in order to confirm. Otherwise, any pullback and loss of immediate support at 78.67 might signal a near-term double top and allow for a stronger reversal. And quick look on dollar Swiss that so far failed to clear the initial resistance at 97.50. This is the previous support, now acting as a barrier on the bounce from yesterday's low at 96.95, where our next downside target at 97 zone so far contained dips as a part of pullback from 98.08 last Friday's high. Hourly studies are still in the positive territory, but pointing lower, and see potential of further extension lower, with the focus on very important 97 support, loss of which is seen as a trigger for a further extension lower, and a possible test of the key short-term support at 96.56, double bottom of 6th and 7th of August 2012 as a part of the larger corrective action from 99.70 peak of 24th of July 2012, with the significant point seen on the daily chart as the studies are losing traction and moving into the negative territory. That might be signal for some stronger recovery. So far the dips were contained at 61.8% retracement of the latest stop move from 94.61 to 99.70 at 96.55, with the above this 96.88 55 days simple moving average so far holding the downside. As said, the risk will be seen on loss of 97 zone and 96.88. That will immediately turn focus towards 96.55, very important support, loss of which to open way for further easing and possible test of 95 zone in the short term. On the upside, the regain of 97.50 and break above this level, that also marks near 50% retracement of down move from 99.70 to 96.55 is seen as relief and to open way for a further extension higher. I do apologize, 97.50 is this level. We are on the 4-hour chart, and also 55 days exponential moving average is seen as a trigger for further recovery towards a very important barrier at 98 zone. That also marks 50% retracement of 99.70 to 96.55 down move. And a quick look at crude oil that got some boost yesterday, but again easing pressure from the Middle East has we have a question about gold. We're going to come back to gold in a while. Let me just finish this. Don't worry, we are going to take a look in every requested instrument. Some gains were raised again on easing pressure from Middle East, and basically the oil prices in the short term still in the sideways mode, I would say, with the upside being limited at 94.69 and downside at 91. 70 with the 4-hour chart studies losing traction at this point, and the also similar situation but rather neutral mode seen on the hourly chart with the break above immediate barriers at 93.50 and then 94.00 required to establish fresh direction towards the upside, while loss of immediate support at 93.00 is to trigger 92.50 and 92.00 on the downside. A larger pictures outlook is still quite bullish, and still sees potential for a further extension higher, with the important barrier seen at 95 at 28 61.8% retracement, and 96.78 200 days moving averages. Uptrend from double bottom at 77.2754 of end of June 2012 still remains intact and remains in play, and seeing potential for a further extension higher. As said yesterday, two key things are driving the oil and pushing the opposite direction towards the upside is the current crisis in the Gulf area and Middle East, while from the other side and as well as possible supply disruption from the North Sea, while from the other side weakening major world economies weakening of the world major economies that might be signal of drop in the oil demand is seen as the negative impact on the oil's price and pushing the price lower. So both of these drivers are seen now, are expected. One is basically expected to beat the other one. I would say more likely the movement towards the upside is more likely at this point, as the oil price remains in the strong uptrend of a recent double bottom at 77. Okay, and a most likely scenario would be further push higher. I would say main risk will be seen on the loss of 90.89 zone that might be signal for a further easing, with strong base at quite away from the market at this point at 87 zone would confirm the further weakness. And now we're going to take a look at gold. Let me just see the question. Okay, we have a request for the gold. Basically, the yellow metal remains in the near-term downtrend of last Monday, with the yesterday's acceleration seen on the release of U.S. data retail sales that were dollar supported. This is the move lower with the negative tone dominating, pushing the gold price lower as important resistance zone. This is what I mentioned, I think, yesterday in the presentation at 1630.40 needs to be cleared. This is reinforced also by 38.2% retracement, and this needs to be cleared in order to resume the short-term recovery from 1526 low. So far the pair failed to break here, and the immediate reaction was seen on the current sell-off, profit-taking on these points, with the stronger dollar moving investors out of the yellow metal. Currently negative tone seen on the 4 and 1-hour chart with the hourly studies being quite extended towards the downside. Immediate risk is basically seen on the 1590 yesterday's low, loss of which is to open further weakness and a possible test of 1585. This is the higher low. And just take a look and see the Fibonacci levels at this point. So we have currently 38.2 and the 1585 is the 50% retracement. I would say at this point, according to the technicals, with the bearish crossover of 20 over 55 days exponential moving average, seeing as additional pressure to the gold as established the near-term downtrend is looking for further extension, and I would say risk would be seen on loss of 1585 that will immediately target 1570, 61.8% retracement, and 1563 low of 23rd of July. The current situation with also the daily studies pointing lower and losing momentum, more risk is seen towards the downside at this point, and the focus should be at 1585 and the 1570, which is the trend line support, the loss of which would more significantly weaken the short-term structure of the yellow metal and keep the upside targets at 15, 20, 40 zone intact for now. Okay, since we started the questions and answers, this was a question about gold. Do we have any other questions, please? Okay, it seems no questions for today. I would like to thank you then all for being with us like every day. We are back tomorrow morning at the same time at 10 o'clock Cyprus time or 7 o'clock GMT time. And we expect you to be back again with us tomorrow morning. Until then, I wish you very successful trading and a nice day. Good luck.